Hello everyone, and welcome to the specialist trading presentation of 3 key strategy rules. Now in today's educational webinar, I'm going to share with you 3 of the rules to one of our best strategies, and I'm actually very excited to tell you about this because it's included as well inside our new Elite Forex Trading College. We only present this college once every couple of years, and it's time to have a very new one, so we've updated a bit with some more strategies. And today I'm going to show you exactly what is entailed within this Elite Forex Trading Colleges and share with you 3 of the rules to one of the strategies. Now welcome, my name is Steven Primo. I am the president and founder of Specialist Trading. For those of you unfamiliar with our website, we are first and foremost an educational company. Our only motivation is to educate you so that you can ultimately put the power back in your hands and make your own trading decisions. This is our philosophy behind specialist trading, where we want to teach you so that ultimately you can basically take charge of whatever decision process you want to be involved. But the only way you can do that is by being provided with sound fundamental education that has stood the test of time. You see, it's been estimated upwards of 80–85% of all traders fail, regardless of what market they trade, regardless of what style, what time frame. And we feel at Specialist Trading the reason is because you're basically giving your power away as a trader. In other words, you're getting your cues or your signals from someone or something else other than your own, relying on your own responsibility and your own trading experience. The reason why most traders rely on an outside source, either a chat room or a trade room or someone on TV, is because they haven't been supplied with the proper education. So this is what we do. We teach you that, and then we mentor you along the way so that you can ultimately take charge. Now, I've been trading for roughly 40 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor a total of 16 years. 9 of those years I was a specialist or market maker. I traded through the crash of 1987 and the bull market that followed after that. So I have been involved in just about every market environment imaginable. I've traded just about every strategy or system. So I know what works in terms of consistency, and I know what doesn't work. So that's what I do at Specialist Trading. I provide all of my students and members with the tips and techniques that I currently use and that have stood the test of time in my nearly 40 years of trading. Now today, I'm going to be sharing with you 3 of the rules to one of our most consistent strategies. That's strategy number 4. But before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of examples using strategy number 4, 3 of these rules, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this, so as you are taking a brief moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't done so already, to follow us and join us on Twitter. Okay, there's our handle right there. You may want to copy that down at Specialist Trading. I post things on a daily basis. In fact, last Friday, I posted that multiple strategies were generating buy signals in the market. And as we've all seen, the market went up around 300 points the last couple of days. Yesterday had a really big rally. And then this morning I posted that for all the Forex traders, one of our strategies was generating a buy signal in the euro dollar. And as we can see, I believe that's already up 60 or 70 pips since I posted that information this morning. So there's a lot of great free information by following us on Twitter, although it is rather limited because of the way it's set up. So if you'd like more detailed information about myself and what we do, my sister site, which is Pro Trader Strategies, has set up a Facebook page for us. Simply go on to Facebook, log on protraderstrategies.com, and there's a lot more information about myself, a lot of free videos there, educational videos, and you can find out more about what we do and what we teach. All right, now having said that, even though my background is in stocks, everything I teach and trade myself personally can be easily transferred over onto the Forex markets, for that matter, even the Emini markets. Let me just share with you what I learned trading on the floor of the exchange, because that's where my background is. And it's extremely important because, as I stated, we are an educational company, so this is what I feel is really going to sustain you. These are the same things my mentors taught me, and this is what I pass on to all of my students. When asked about successful trading, they said successful trading should be non-subjective. This means basically that 2 people looking at the same chart should come up with the same result as to what they want to do. But how many times have you either looked at a chart or some news event comes out or some event happens and you perceive it as being bullish, Or someone on TV or a friend of yours or another trader you know says, oh no, that's highly bearish, okay? These are things that are not cut and dry. They're too discretionary. We don't want to be that subjective. We want to have things cut and dry so that two traders will absolutely look at the same chart and know exactly what they should be doing. That's what we teach here. They also said that successful trading should be consistent. Now, we feel that too many educators or too many websites are stressing how much money you can make in a relatively short amount of time, how many thousands of percentage points you'll make with this dream system of theirs. We don't believe in that or teach that. What we teach and try to instill in all of our members is consistency. And consistency is just actually 2 steps forward, 1 step back approach. We realize that we will have small losses from time to time, and I'll even show you some today, some small losses. But the beauty of all the techniques we teach is their resiliency, their ability to bounce back. That's what consistency is. And in my nearly 40 years of trading, consistency is what will sustain you. Okay? Not some fly-by-night system that generates thousands and thousands of percent each year, because it can easily give it back and lose everything. Trust me, I've seen that happen in my experience as a trader. When I was on the floor, I knew of a lot of traders who traded some great system and they made literally hundreds of thousands, if not millions of dollars in a relatively short time. And guess what? Not one of those traders is trading today because they've given it all back. So really that type of trading, that type of mindset doesn't matter. It doesn't come into play at specialist trading. What we just try to teach you is something that will sustain you so that you can be trading 20, 30, 40 years down the road. And that is a consistent strategy. 2 steps forward, 1 step back. Now, successful trading should also be as simple as possible. Look at your trading plan right now. Is it loaded with convoluted logic? Does it have 20, 30 rules? Do all the indicators need to line up perfectly in order for you to take a setup or a trigger? Do you have to wait and see what happens with the news before you can trade? This is the way most people trade. It's far too complicated. I'm saying this from firsthand experience because this is the way I used to trade. Everything on the floor when I was trading had to deal with news, had to deal with earnings, had to deal with proper setups with the indicators. It was a wonder I even had a trade because there were so many qualifications. My mentor said that you should have no more than 4 or 5 rules, 6 maybe tops to any strategy. Something that is so simple you should be able to write it on the back of a cocktail napkin, okay? So that's how simple trading should be. And if you look at traders who have been trading for a relatively short time, 5, 10 years, which is really short in the marketplace, most of their trading plans are extremely complicated, technical indicators and convoluted logic. Whereas you look at people who have been trading 30, 40, 50 years, most of their trading methods and plans maybe have 3, 4, 5 rules tops. So that's what you want to strive for. That's the reason why those traders have been trading for that long, because they have kept things extremely simple. Now, lastly, and most importantly, what my mentors taught me and what I teach my students is that successful trading should make you a part of the process. This means that you should not rely at all on an outside source telling you what you should do. You should never go to a signal service and ask, well, what should I buy or sell today? You should never look on TV to get your cue from the earnings or whatever that's coming out in some economic indicator to tell you what to trade. Because this basically is you're giving a message out to the market and to other traders, I don't know what to do. I have to rely on something else to tell me how to trade. Now, at specialist trading, what we do is we provide you with all of the information so that you'll never have to ask or wonder what to do in the marketplace. You'll always have a clear, definitive answer as to whether you want to take a trade, whether there's a trade setup at all, or whether you don't want to take the trade. You'll know right off the bat with what we teach you. I'm going to show you a few examples of that in just a few minutes. So you should never, and I always preach this to my students, never ask anyone what they think of the market, because you're basically sending out the message, I don't have anything, any idea or anything in place here. I don't know what to do. Tell me what you think, I should do. And that to me is no different from people at the racetrack saying, who do you like in the fifth? All right. That really, in my opinion, is a gambling mentality, and you'll ultimately be just creating a recipe for disaster. So trading should make you a part of the process. You should be included in every decision you make. You shouldn't rely on anything else. And you should just be listening to the most important thing at all, and that is the chart in front of you, the market that you're trading. That's where everything comes from. That's the source of your profits in your trading. So that's the only thing you should be looking at. Don't worry what anyone or anything else is saying about the marketplace, okay? So these are the things. Remember, we're an educational company. You can see how much detail and attention we give to educating you just in the first 5 minutes of this presentation. So that's what our goal is, to educate you so that you can put the power back in your hands, okay? Now, in today's educational presentation, I'm going to be sharing a lot of information with you, but I'd just like to state right off the bat that I know you may have questions. Kindly wait till the end of today's presentation to ask any questions. I promise I'll go through each and every one of them with you, but the presentation seems to get bogged down if we stop every 5 seconds for a question. So just wait till the end, and then I'll open up the question and answer box, okay? As I stated, my goal is not to trade for you. I don't simply want to force feed you signals on a nightly basis. Even though our website provides signals for our members, it is mainly as an educational tool. We're just trying to educate you to show you what to look for, a means by which you can check your work. Ultimately, most of the students who look at our signals as a learning tool don't need to look at them after a few weeks or even a few months because they know what is in front of them already before we give out the signals. So my goal is not to force feed you any type of trade or tell you what the perfect time frame is. My goal is to teach you how to trade with a specialist edge. This is the same edge that turned my trading around when I was struggling so much, my first couple of years of trading, and has been able to sustain me for nearly 40 years after that. This is what I try to instill in all my traders as well. All right, so I'd like to talk about what we're going to be offering in our college course. This is our curriculum for that. It's 6 weeks of tremendous jam-packed information for trading the Forex markets. The first week is we're going to go over the foundation and the building blocks of Forex trading. I'm going to share with you more of our philosophy and how we feel we can put the trading back in your hands. Week 2 will cover our first strategy, which is strategy number 1. That is probably our most consistent pullback strategy. So what we're looking for is some type of trend, either up or down, and then we're looking for a counter trend, hopefully to buy at cheaper or inexpensive prices, or hopefully to sell at higher prices, and this is just a pullback. It's a great strategy, and we've had really nice success in terms of consistency with it. The next week, we'll cover our next strategy, which is strategy number 4, probably our most popular as well as consistent strategy. It generates pullbacks as well as consolidation patterns, and it generates a lot of signals. So we're going to cover that. In fact, today I'm going to be sharing with you some of the rules to that particular strategy. Now, the next week will be Forex strategy number 5. This strategy was first devised simply for the Forex because of the great trends the Forex market will have, and it relies solely on candlestick patterns. So this is a great strategy we have. We're going to be sharing with you as well. Now, week 5, another one of our most popular tools is the PET-D. It's our short-term trend identifier. Now, this was a tool I was introduced to on the floor some 35 years ago, and at the time, we had to actually calculate this small formula by hand. Now we've generated it into a algorithm so that it colors the bars and tells you instantaneously if we are in a short-term uptrend or a short-term downtrend. Great tool. I use it on a daily basis. And then finally, in our last week, we'll cover 2 things: advanced trade management, which is once again another technique I learned from my trading floor days that will really keep you in sync with what the market is doing and show you whether you should be trading or whether you should be out of the market entirely. And then we'll put it all together with some final questions and some final bits of information about trading more aggressively or more conservatively. This is jam-packed information in 6 weeks, things that I've accumulated that took me nearly 40 years to accumulate. I'm going to be sharing with all my students in our college in 6 weeks of live trading with me, okay? All right, so let's talk about Forex strategy number 4. This is what we're going to be sharing with you today, 3 of the rules. It only has, I believe, 5, maybe 6 rules tops if we include exit points, but we'll share at least half of them with you today and show you how simple it is to be in sync and to have and pick these high probability entry points. This is strategy number 4. Once again, probably our most consistent as well as popular strategy. Now, who is strategy number 4 for? Well, it's for traders looking to catch quick momentum moves. I was first introduced to this roughly 30 years ago, and when I was trading this strategy on the floor, it was devised for us to get in and out of quick trades because as a specialist on the floor making markets in over 50 stocks, I was basically holding positions no more than a couple of minutes, sometimes 5 minutes, 10 minutes at tops, okay? I was getting in and out rather quickly. This is a great strategy for that, but we've also taught students that if they want to stay in trades longer, how you can stay in a trade longer, up to weeks or even months if you'd like. Now, this is for basically all students, so you don't have to worry and say, well, Steve, I haven't been trading that long. I don't know anything about this kind of stuff. This strategy is traded in over 100 countries around the world, virtually in every state in the United States, from beginners, meaning people who just started trading last week, to advanced traders. We have hedge fund managers trading this particular strategy. Everyone gets the same basic format in the beginning, so there's no need to worry that it's too advanced. Then once you understand the basic format, then we work with you to devise it so that you can alter it and edit it to fit your own personal needs by making it more aggressive or more conservative if you'd like. Now, strategy 4 is a pattern recognition strategy, so there's no need to have tons of indicators, there's no need to look at news, there's no need to rely on anything else other than how to discern and identify this particular pattern. Now, in the intensity level, if we had 1 being the most intense of all strategies, where you basically couldn't leave your computer, and 3 being the most relaxed, where you could basically enter an order and walk away for a couple of days, it's right in the middle. It's a very moderate number 2 intensity level. Now, as I stated just a few minutes ago, our whole edge at specialist trading is consistency. This means 2 steps forward, 1 step back. 1 step back is literally we will have losses from time to time. And that's perfectly okay. There's absolutely nothing wrong with having small minor losses as long as it doesn't turn into a pattern. Okay? So that's the beauty of our strategies. Even when we go into these small periods of small losses, we will be able to quickly make them back. And we'll show you how to do this in the course. All right, so let's talk about the indicators. What indicators are we going to be using for this particular strategy? Well, we're going to share them with you. And the first indicator we're going to be using is the buy-sell line. All right, so what is the buy-sell line? I'm sure you're all saying, I don't have that on my charting software package. Well, yes, you do. In fact, all of you do. The buy-sell line is simply a 50-period simple moving average. And guess what? That's the only indicator we're going to be looking at, okay? There's nothing else you need to plot, no volume, no ratios, there's no oscillators to plot. All we're plotting is a 50-period simple moving average. Remember I told you just a few minutes ago, the reason why traders are able to trade 30, 40, 50 years down the road is because they have very, very simple trading plans. Well, it doesn't get any simpler than this. So that's all we're looking at, a 50-period simple moving average. All right, so here are the rules, the first 3 rules for strategy number 4. Now, you may want to copy this down, but don't worry. I mean, we are recording this, so if you don't get a chance to copy them down, you can request a recording to this particular webinar, okay? Now, remember, this is for all time frames, and we're going to give you the buy rules first of all, but we'll just reverse for sells, okay? Now, first of all, the rule number 1 states that the closing price must be above the 50-period simple moving average. So if you're looking at the Australian dollar, if you're looking at the British pound, you want to make sure that it at least closes above that 50-period simple moving average. Now, we're going to look to buy, rule number 2, when a price bar closes in the top 25% of its range. This is going to be labeled the setup bar. We say the top 25% of its range. I'm going to show you in just a few minutes what that means, but it's very simple. You just take the entire range from top to bottom of the price bar and then divide it by 4. Now, rule number 3 is we're going to buy when price trades 1 to 3 pips above that setup bar's high. Okay, it must trade above that setup bar's high, and it must trade on the next bar only. Okay, so very simple. Now we have just a few more rules left in this strategy that I can't divulge right now. That's the specific pattern we're looking for. I'm sorry I can't give up that because it would be fair to the people that spent a lot of good money on this particular strategy, and then all of a sudden in a webinar I was giving all the rules away for free. But I am giving you just about half of the rules right now. So let's take this step by step so you can understand this and you can start looking for this as early as in the next hour when this webinar concludes. All right, step 1, price must close above the 50-period moving average. So if we look at this chart here, and this is a generic chart, but remember we're talking about the Forex markets, here's the 50-period simple moving average. Now the majority of price bars are above. It would be ideal if all of them were above, but as we see here, we have one bar that closes on or just a little below the 50-period moving average. The next bar opens below, but where do we close? we close above. So all of these bars basically are closing above, with the exception of this one here. This one's a little, on the fence. We're not sure if it's on the line, but the majority of these bars are all closing above, and the very last one is closing above. That's the bar in question. Okay, now we go on to step number 2. We're going to look to buy when a price bar closes in the top 25%, the top quarter of its range. If we find a bar that does, and it meets all of the other rules of the strategy, we will label this the setup bar. So as we look here, we're looking at all these bars, and not a lot of bars have closed in the top of their range except for this one right here, which closed at the very top. Now if you're having difficulty understanding what we mean by closing in the top 25%, all you have to do is take the bar and divide it by 4 separate equal parts, okay? And it doesn't matter if this is a candlestick, it doesn't matter if it's an open, high, low, close, it doesn't matter if it's a range bar. You just take the extreme high and the extreme low and divide it by 4, okay? 4 separate but equal parts. If you close in that top quarter right here, that top 25%, well, that tells you that this is a setup bar. And if we meet all of the other rules, this is a valid setup bar, okay? Now remember, if we're looking at a candlestick bar, nothing changes. You just take the high of the wick to the bottom of the wick. We're not concerned with the body. We're just concerned with the extreme high and extreme low. Divide it by 4, and if you close in the top quarter, well, that's going to be your setup bar, okay? Now, this doesn't mean we can simply buy at the market because we've identified a setup bar. We have to go to step number 3. We're going to buy when price trades 1 to 3 pips above that setup bar's high, okay? So we have to trade above there. You notice I said we have to trade above. I did not say price has to close 1 to 3 pips above. So all we have to do is trade above there, intra-bar. But here's the one caveat. It has to happen on the next bar because we're trying to catch momentum. So we're not going to sit around and say, well, I found the setup bar and I have a couple of weeks, I'll wait to see if it goes back above there, okay, 1 to 3 pips. No, it has to happen on the very next bar. So if we look here, we have found the setup bar, and this is where we want to buy, okay, roughly about 3 pips above, let's say, and the next bar, it traded there. Now, if you notice, it didn't close above there, but that's okay. We're not concerned with where the close is. We only want to make sure to see where it traded, and it traded above there on the next bar. So we're long, we entered the trade, and look what happens. It takes a few days, but ultimately it starts going. That's how easy this is. See, we didn't have to look at earnings. We didn't have to look at what someone was saying in some chat room. You just listen to the only thing you should be listening to, which is the market. All right, so let's look at some recent strategy number 4 trade examples, okay? Now these, once again, strategy number 4 along with strategy 1 and 5 are going to be taught in the course, in the college course, okay? But we're just going to focus on these 3 rules right now, and you'll see exactly how they come into play with strategy number 4. All right, let's look at the euro dollar here. All right, this is just a couple of weeks ago, actually a little over a week ago. As we see here, first thing we ask ourselves, where is price in relation to the 50-period moving average? Price is above, okay? So that means we're going to be a buyer of the euro dollar. We're not going to sell the euro dollar. And we're looking for a bar that closes in the top 25% of its range, which is right here, okay? It met all of the rules, okay? Now, we still have a couple more rules to be met. In other words, we have to purchase once we trade above here. We cannot simply buy at the market. All the other rules, the remaining 3 rules of the strategy have been met, but we cannot buy until we trade above. So as you can see here, on the very next day, on the 26th, just about 2 weeks ago, we traded above. So we would have gone long the euro dollar, and once we're in the trade, we tell you where to place your stop. We tell you where the most appropriate exit levels would be. And look what happened coming into May. All right, the euro dollar basically, went up 300 or 400 pips just in about a week. How about the Canadian dollar? Okay, this was coming into March of this year. Now, obviously, someone would look at this and say, well, Steve, it seems to be rising and we've got some nice support here. We don't care about that. We don't care about support and resistance levels. We don't care about volume. We don't care about Fibonacci, because remember I said in the very beginning, those things are too subjective. Successful trading should never be subjective. And trust me, there are tons of Fibonacci traders out there who will tell you that this is the proper Fibonacci level, where another one will say, no, no, that's not the one, this is the one. It's just too subjective. I'm not saying that it doesn't work, but you really have to be in tune with that method. and the majority of traders aren't. That's why it's so difficult to discern where the proper levels are. Same thing with Elliott wave, the same thing with support and resistance, the same thing with volume. Well, there's a number of techniques. They're very difficult because they're too subjective. It's much easier to have things cut and dry. And the very first rule is, where is price in relation to the 50-period moving average? Price is above. Sure, we have maybe a few bars here that are, price is below. Maybe we have a few bars here that are closing on or above, but the majority of bars are closing below. So this means we're going to be a seller. We're never going to buy if price is below the 50. Okay? And conversely, we'll never sell if price is above the 50. But in this case, the Canadian dollar in March was below the 50-period moving average. Now we need to find a bar that meets all of the rules, and that includes closing in the bottom 25% of its range, which is right here. So the automatic software generated a setup bar, a valid setup bar, but we can't go short until we trade 1 to 3 pips below that setup bar. All right, so our software will tell you when a valid setup bar has been generated, but that's just for educational purposes. Remember, we don't even want you taking your cue from an automated buyer-sell signal. We want you to spot these on your own. So just for educational purposes, though, we provide this with you in the beginning just to know when a valid setup bar is. And one was created coming into March. As you can see here, right in the last week of February, it was triggered, and you would have gotten short, roughly about 1.3600, okay? And look what happened, okay? Now, we didn't have any idea why the Canadian dollar was so negative. We weren't following economic reports or what was going on in different countries. The only thing we knew is that, first of all, it's below the 50-period moving average. So remember, you don't want to be a buyer of anything if it's below the 50-period moving average. And then secondly, it met all the requirements of the strategy. Now, the beauty of strategy number 4 is that it generates probably the most signals out of any strategy we have. So you never have to worry if you miss the initial signal, because many times it will generate more and more and more all along the way. How about the Australian dollar? This was March coming into the end of April. Now, looking in hindsight, someone could say, well, Steve, yeah, it's easy to see that I should have gone long the Australian dollar because it's gone straight up. That's true. But we knew as far back as mid-February, with a number of consistent closes above the 50-period moving average, that we were only going to be buyers. So we knew back here that we were looking for buy setups. And guess what? We had a number of buy setups all the way up. These are all valid. Strategy number 4, buy setups, all profitable. Now, the beauty of it, as you see here, an advantage of strategy 4 is that it can be applied to virtually any time frame. Now, here's the Canadian dollar on a weekly time frame. The same rules apply. Nothing has to change because we've gone up to a higher time frame. We are above the 50-period moving average. So what does that tell us? Are we going to be sellers of the Canadian dollar? Absolutely not. I don't care what someone says in a chat room or someone says in some blog or some report. We don't listen to outside sources. They're only going to serve to confuse you and make you doubt what you should be focusing on, which is the market in front of you. And the market in front of us in this short example right here is telling us to go long. Why? Because we have a bar that closes in the top 25% of its range, and it meets all of the other rules of the pattern we're looking for. So that's our valid setup bar, and we're going to go long if we trade above it, and we did. So we went long the very next week, about 1.2500, and look what happens, okay? We didn't follow any news, we didn't follow any reports, anything technical. All we followed was what the market was telling us. Now that's on a weekly time frame. I know a lot of people like to trade the currency pairs intermediate time frame or intraday as well. Here's an hourly chart of the Swiss franc. As you can see here, this is at the end of April coming into the beginning of May. If we look here at the bottom of this chart right here, here's May 2nd coming into May 2nd. Right? This is an hourly chart. Now, coming into this, we see that we were below the 50, and then the trend changed, and now we're above the 50. So this is simple. All you want to do is, once we're below the 50, we are sellers, okay? And once we go above the 50, well, then we're going to be buyers. Now, all the way down, we had a total of 4 sell signals. 3 of them were profitable. Here's the one that didn't work out. That's okay. Remember we talked about resiliency? So you would have had a small loss here. Here's the one step back. But then look what happened. Once we changed trends and now are consistently above the 50-period moving average, what happened? Well, we generated buy signals. And so you would have easily made back that loss right back here and then gained it all back and then been back in the profit mode on this trade. So that's what we're talking about. We're not going to simply sit here and tell you that everything's going to work out fine and that we generate thousands of % on every trade and that you'll never be a loser again. We don't believe in that. And I always say, if you hear someone saying that, you should run, because it's just not true. It would be similar to an athlete hitting a home run every time he comes up the plate, or making a basket. It just doesn't happen. Even the best of athletes or the best of entertainers don't have a hit every once in a while, a hit movie or a hit song. They go into slumps, and that's similar to trading. It's perfectly normal, just as long as you trust and have a method that can come back. Now, these strategies work best with currency pairs. You're going to see how well number 1 works with strategy with currency pairs. You're going to see how well number 5 works as well. But here's the best thing about this. You can also apply these same exact strategies to stocks, ETFs, futures, and commodities, and you'll have a high level of consistency with them as well. Let me show you what I mean here. Here's CVX, okay, this was just about a month ago. Same exact rules with strategy number 4. We're showing you strategy number 4 right now. A buy signal was generated on the 6th to go long on the 7th the next day if you trade above, and the stock went up 9 points in 3 weeks using the same rules we teach you in the Forex College. Now we look at PRGO here on the 20th, just a few weeks ago. Where are we in relation to the 50-period moving average? Well, we're below. So the market is telling us, not somebody in a trading room, but the market is telling us we should be sellers of PRGO. It's simple. There's nothing you have to pay for this. Everyone has a 50-period simple moving average. So all you have to do is ask yourself, if we're closing consistently below, the market is telling me it wants to go lower. Now at the same time, our proprietary strategy 4 generated a sell signal. So all we had to do was take advantage of that, and the stock went down 30 points. Once again, we didn't know about any news that made the stock go down much lower. We don't care. We're not interested in that because we take all of our information from the market. My mentors taught me nearly 40 years ago that the market, whatever you're trading, currency pairs, stocks, futures, will tell you just about everything you need to know. So why waste your time and mostly money on listening to outside sources tell you what to do? The market tells you just about everything, as we saw in this example right here. Now this also works on ETFs. Here's an ETF, the IWM, or that's the ETF of the Russell Index. At the end of March, on the 24th, it generated a strategy 4 buy signal and quickly went up 8 points in 1 month using the same techniques. If we look at a 15-minute chart of the Emini futures, now this was taken on the 3rd of last week, so this was basically last Tuesday, I believe. If we look here in the lower left-hand corner, 5-3, where is price in relation to the 50-period moving average? Price is below. So this is telling us, even on a 15-minute time frame in an entirely different market, we're only going to be sellers. Strategy 4 generated a sell signal here. Now, if you had taken this trade and just stayed till the end of the day, you would have had a nice, a modest little profit here. But if you were lucky enough to hold on to the position overnight, well, look what happened. We had a nice gap down. All right. We didn't know why this E-mini was going to gap down that much. Just listen to one thing, and the market was telling us it's most likely it's going lower. Now we can also apply this to crude oil, as we see here, commodities. Strategy number 4, using the same rules, generated 2 buy signals on the 6th and on the 18th of April. And we've seen crude oil go up after that, coming into May. Now, 2 extra bonuses that we are also including in the Forex College, things that I've accumulated in my nearly 40 years of trading. We're going to be talking about ATM. That stands for Advanced Trade Management. This is another technique I was introduced to on the floor of the exchange, and it has helped me tremendously. It teaches me how to stay in the market and how to get out of the market at the right times. And then we're also going to introduce the PET-D. That, once again, I told you, is probably our most popular tool, not a strategy, but a trading tool. It's the Primo Early Trend Detector. Now let's talk about the ATM first of all. That stands for Advanced Trade Management. Now let me know if you've ever seen something like this happen. Here is an example in the euro dollar. Okay, this was taken, I believe, last year or a year before, but it doesn't matter because you'll see this happen time and time again. In this instance, this is an exact strategy we have. I believe this is one of the strategies we'll be teaching you in the course. But look at all of the buy signals, or buy trades or profitable trades that were generated. And now, just months later, using the exact same strategy, look at all the non-profitable trades that were entered. Okay, nothing changed. The only thing that changed is that the strategy was out of sync with the current market conditions. It doesn't mean that the strategy is faulty. It just meant that it's out of sync with current market conditions. Well, what this tool does is put you in sync with the right market conditions so that you'll have a higher level of consistency and avoid these drawdowns. All right, so it's a great tool. We teach you how to construct this in the course. In fact, this is so proprietary and so powerful that we only offer this tool in our college courses. We don't have a separate course for this or a separate webinar. We don't even talk about this in webinars because it's that powerful. And then we're going to give you the PET-D. All right, the PET-D is a great tool in and of itself. It's simply titled the Primo Early Trend Detector. Remember, this was a formula I was introduced to on the floor, and we just simply use it as the formula because we had to calculate it by hand. But now that we have high-speed computers and programmers, we've turned it into a proprietary color bar algorithm. So we've made it much easier. There's nothing you have to do. There's nothing you have to plot. All you have to do is add it on to your software and see that when you have a series of green bars, it's telling you, the PET-D is telling you that you're in a short-term uptrend. And when you have a series of red bars, it's telling you you're in a short-term downtrend. Now, as you can see, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know whatever direction it's going, you can apply any strategy, any technique, it doesn't matter, but to that direction. So as we see here, this older chart of the Canadian dollar, all of the bars are green. So you know with assuredness that there's no reason we're going to be going lower because we're in a short-term uptrend. So even when we had these down days right here, and it looked like we were going to roll over, the bars remain green, telling you that it's safe to stay long or to look for long positions. Now conversely, if you have all the bars red, it's giving you the confidence to stay short or to look for sell positions. Many people here would say, well, the euro dollar found some really nice bottom right here. This is really good support. I'm going to be a buyer. And look what happens. The PET-D, though, was telling you the entire time, even though it was waiting right here, that the bars remained red. So there's no reason at all to think about going long. This is all going to be included in the college. You can also apply it for long term. Here's a monthly chart of the S&P 500 index. Okay, you see all the peaks and valleys with the dot-com crash and the banking crisis in 2008. Well, once we apply the PET-D, you can see that you can also identify long-term trends as well. So there's lots of ways to use it, but remember, it's simply a great tool for identifying the short-term trend as well as confirming your trades. So let's go over once again what's in the curriculum. Week 1, we're going to really get into the philosophy, the building blocks of how to trade the Forex markets. Okay, we're going to share with you what we feel is our philosophy, things that I've accumulated in 40 years to hopefully elevate your trading. In week 2, we start off with strategy number 1. We didn't talk about that today, but that's a great strategy for finding and generating pullback setups. So if you've ever traded pullbacks, but you've had difficulty in finding out exactly where to get in and where to get out, this is a great strategy for that. Strategy number 4 is a pattern recognition strategy. We just gave you 3 of the rules to that specific pattern. As you've seen in the examples, the numerous examples I showed you in all markets, time frames, it works tremendously. It always generates a lot of signals, and it's by far our most popular as well as consistent strategy today. Strategy number 5 is our candlestick generated strategy. It works with candlesticks. It's a great strategy. It was designed specifically for the Forex markets because of the large trends you see. And so it's a great trend trading strategy with candlesticks. We give you in week 5 our best tool for trading the short-term trend. That's the PET-D. It automatically colors the bars green or red to tell you what the short-term trend is. So you'll always have the confidence, the knowing that you're in sync with the trend. This also comes with different ways in which to trade with the PET-D as well. And then in the final week, week 6, we talk about advanced trade management, knowing when to trade and knowing when to stay out when your strategy is out of sync with the current market conditions. And then we put it all together. We devise and put things, give you more advanced courses and more advanced and conservative ways in which to trade so that you can ultimately pick and choose how you want to format your own strategy and your own trading plan. Now, once you get to know the strategies and we feel that you've understood the information and you're progressing, we give you these educational email alerts. Remember, they're just for educational purposes only. Here's an example of one that was generated on the 6th. As you see here, this is for the Forex members. It says strategy number 4 has generated a new signal. The rules are as follows, and it tells you where the basic format of the rules are in the Canadian dollar. It generated a sell signal, okay? Now, if we look here, this was the setup that was generated. Someone looking at this would have said, well, Steve, boy, we hit some type of really sharp bottom here, and the blog I go to, as well as the trading room, tells me that this was some really nice support. I don't think I should be selling. Once again, where are you taking your cue from when you listen to those things? You're taking from outside sources. They have no larger level of consistency than you do. You should only take your cue from the market, and that's what our methods do. They translate what the market wants to do. So strategy 4 generated a sell signal on the 6th, but we couldn't go long until we traded on the 7th. And as you can see, look what happened coming into May. As well, on the 25th of April, just the last couple of weeks ago, a buy signal was generated in the euro dollar. Okay, this is completely different from the one I posted on, I tweeted just this morning. But as we see here, here's the 25th. We're above the 50 period. This was, we showed you this example earlier, a valid signal to go long, and we took off the very next day. But trust me, you're not going to need or have to rely on these signals once you fully understand the process. Remember, our goal is to teach you this so that you'll know everything like the back of your hand and you make your own decisions. Most of our traders use the educational signal service for a couple of weeks, maybe a month, just to know what to look for, to check their homework, and then they don't have to rely on it anymore because they see the setup while it's happening. Now we have tons of testimonials. My sister site, Pro Trader Strategies, has a testimonial page where we have tons of people telling us and writing us how well they're doing and how for the very first time they've been consistent in their trading. But I'd like to read you something that came in from one of our students a while ago who also trades the Forex market. It says, Steven, I have been day trading Forex for some time. I was hanging in there with good money management, but not really making money. I'm sure this sounds familiar to a lot of you. Now, since discovering you, the 50-period moving average, and using strategy number 4 since September 19th, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. I missed a few. I only have to review the charts twice a day, which allows more trades and a lot lower risk than daily. Plus, I get to golf and read more. What can I say but thank you for the education. Looking great for the future. Once again, I'm glad that this person stressed education, because this person is basically putting the power back in their own hands. They're making their decisions. We're not telling them what to buy or sell. We've just educated them, and now they know how to trade. And that's what it should come down to. You should not have to rely on anything telling you what to buy, what to sell, or what the best time frame is. You should make that decision on your own after we set you up with the proper information. So let's recap before we go into answers to your questions I'm sure you have. Remember, you're going to get 6 full weeks of trading tools and technique. We're providing you with 3 proprietary Forex strategies. Now, even though they work in other markets, we're going to share with you how they are applied definitely for the Forex currency pair markets in any time frame. We'll share with you the exact stop placements, exit placements, and profit targets, and we'll give you multiple areas for this so that you can pick and choose which ones you want to apply to your own personal trading. So we'll share with you the educational signal service just for learning tools and ways in which to elevate your trading, and then we'll teach you how to trade conservatively as well as aggressively in these different versions, and then you can decide how you want to apply it to your own trading. As a bonus, we're including the ATM, a great technique for making sure and monitoring when your strategies are in sync with the market. And then the PET-D, our most popular trading tool for defining the short-term trend. Remember, this not only is something we're going to throw at you in 6 weeks and say, okay, you got it, good luck. You're also getting 39 years of trading experience, myself as your personal mentor, to teach you and be with you every step of the way. So I can't think of a better program for that. Now, Pro Trader Strategies is my sister site, okay? Remember, what we do with them in conjunction with Pro Trader Strategies is get you in gear to becoming a successful trader. We teach you how to be non-subjective, how to be consistent, how to make your trading as simple as possible, and how to make you a part of the process. These are the things that will ultimately get you on being a consistent trader. So you can hopefully be trading 30, 40, 50 years down the road. So here's what you're going to be getting. Here's our Elite Forex Trading College. 6 weeks of detailed instruction. Once again, the ATM, the PET D, full access to all of my strategy rules, included with lifetime correspondence, signal alerts, all the entries, exits, and stocks, weekly webinars, 3 proprietary strategies. This is tons of information that I've accumulated in 40 years into a great 6-week detailed program. Now, if you took all these individual courses that are on my sister site, Pro Trader Strategies, and bought them separately, it would cost you close to $10,000 for all the information provided. But we've slashed the price down 50%, down to $49.95. But we're also, for all the people attending today, we're also going to cut the price even more. We're cutting it 10% more, down to $44.95. And we're going to include payment plans. So even though we realize that not everyone can come up with that lump sum, we will have payment plans so that for a small deposit, you will be able to be up and running ASAP, okay? This once again includes 1 year of trade signals, educational trade signals, but this is for a limited time only. Remember, we've slashed the price down to $44.95. If you purchase this separately, it'll be costing you close to $10,000, and we are including payment plans. So you can put down a small deposit and still be up and running in the live educational course with myself. So here's how to take advantage of this great deal. Okay, Pro Trader Strategies handles and markets and promotes all of my courses and my colleges. Simply email them, or you can call them directly at 310-598-6677. Now the link at the bottom is the link that will take you up to the sign up page. You can be up and running immediately, but that is not a live link. But if you look over in the chat box on the far right hand corner of the GoToWebinar column there, you'll see that they have posted a live link in the chat box. So you can simply click that on for more information, and you can sign up if you'd like. But if you want to take advantage of that discounted payment plan, call up Pro Trader Strategies or send them an email, and they will be happy to put together something with you, okay? All right, now I'm going to leave this information up here. I want to thank you for holding off on any questions, and I'm going to open up the question and answer box right now. And let's see, Theo asked, Steve, what about the exponential moving average? It's a great question. I assume you're asking about in terms of the 50-period moving average. Would it be okay to substitute the exponential? Yes, there's absolutely nothing wrong with that. Just let me give you a little bit of experience. I've been trading for nearly 4 decades. I've tried, the 20 period, I've tried the 200 period, and I always go back to what my mentors taught me nearly 40 years ago, which is the 50 period, and it seems they were right. In any market and any time frame, the 50 period simple moving average seems to work the best in terms of consistency and getting me on the right side of the market. Now, remember, the basic concept of that is simply to get you on the right side, okay? It's not to tell you, well, we have our first close above the 50 period moving average. That means I have to buy the euro dollar. That's not the way it works. It simply tells you that if the prices are above, you should be looking for buy setups, regardless of what strategy you trade. So go back and look at your last 10, 20 trades. I'm sure you had a number of losses in there, as any trader would have. Most of the losses are because you probably were buying below the 50 period and selling above. Now, the exponential is fine. This is not like some magic rule here with the 50 period simple moving average, but in my experience, the 50 works the best. Now, if some people are trained with a 200 or 100 period moving average, okay? That's fine, but in my opinion, for longer term trading. In other words, if you're looking at weekly or even monthly bars, you should be using a 200 period moving average because it's a slower rate of change, and that has to deal with the longer time frames. Conversely, some people say, well, Steve, how about a 20 period moving average? I always hear about that. That works fine as well, but only if you're applying that to intraday charts, 5-minute, 10-minute charts. So why overcomplicate things? I said in the very beginning of this presentation, keep your trading plan as simple as possible. And the best way I know how to do that is forget about the 20, forget about the 100, forget about exponential. Just plot a 50 period simple moving average on all charts. It doesn't matter if it's a tick chart or if a monthly bar chart. Just have a 50 period moving average there, and if price is above, you're only going to be a buyer. If price is below, you're only going to be a seller. And that's how simple it is, okay? Let's see. Martin is asking, is today a setup for the euro dollar a day bar? Well, today, I don't want to give that information away. Let's just say that it's setting up for a buy, but for all I know, it could have already generated that, and we could be in there. I just don't want to give too much information away right now. And plus we're not a signal service, so I don't want to tell you and give you any recommendations whether to buy or sell. I was just saying, I tweeted that one of our strategies is setting up a buy setup in the euro dollar today, and we'd have to watch it just a little bit more. Tom is asking, well, where is your stop? Well, Tom, that's all in the course. I gave you 3 of the rules. If I gave you more, that would be, the people who just purchased strategy number 4 or who attended my college a couple of years ago in the Forex markets would say, hey, Steve, why are you giving away everything for free? I paid good money, and now I go to a webinar and see that you're giving away the entry, the stop placement. So it wouldn't be fair, Tom, to the people who have paid good money for this. But I gave you half of the rules. I mean, you should be able to, if you've been trading for enough time, to figure out if you, want to try it on your own, where you place your stop or exit level. Okay. Theo also asks, do you teach Fibonacci retracement? No, I don't, Theo. And I think I stated this about 10 minutes ago. I have tried trading, Fibonacci, and I'm not trying to badmouth it or put it down, but once again, as my mentors taught me and how I explained in the opening statement, it's too subjective. Some trader will look at this and say, this is the 62% level of where the support is or where the pullback is. And someone will say, no, it's down here. It's at a different level, and we should actually be selling it. This is a pullback, to the upside. So it's too subjective. Now I know of some traders who do very well trading Fibonacci retracements, and I'm not, once again, putting them down, but there are very few people who can do that. Remember, we want to keep things very cut and dry, where 2 people will look at the same chart and come up with the same exact analyzation. And it's been my experience, with myself included, that they're too discretionary. One person's specific Fibonacci level is an entire different level for another trader. So when things are cut and dry, you don't have to worry about that. And it's like taking a tremendous load off your shoulders, and you say, gosh, I don't have to figure that out if this is a certain level anymore and use all the indicators and tools. All I have to do is look at the chart in front of me and look for the pattern. That's how simple it is, okay? Gene asks, does the 50-period, oh, hi, Gene. Gene Mulcahy is a student of ours, says, does the 50-period simple moving average change with all the trades executed? Every 50 trades, it changes, or does the 50-period simple moving average change with time periods? That's a good question, Gene. Well, whatever the 50-period moving average is based off of, it changes on each and every one of those bars. So we're basing it off of each bar. Now, a lot of people call it the 50-day moving average, but that's only if you're looking at daily bars. But if we're looking at 5-minute bars, it will base its calculations off of the last 50 5-minute bars, an average of them. And then on the very next 5-minute bars, well, it subtracts the first one and then includes the last one. So yes, it is dynamically changing with each and every new bar added, okay? Now, it depends on what bar you are associating that with, okay? We're not applying it to any moving average, other moving averages or any other indicators. We're just basing this moving averages off of the bars. So each time a new bar is added, it recalculates, okay? I hope that makes sense, Gene. Let's see, Theo asks, is there any demo video of the software, or do you have any tube video? Yeah, you can go to our video blog. That's on Pro Trader Strategies website, and there are tons of videos there, and you get a lot more information. But remember, these discounts and what we're having here is for a limited time only, along with the discounted price, as well as the deposit you can make there for the payment plan. So if you're seriously thinking about taking your Forex trading to the next level, you should take advantage of this, okay? In conclusion here, before we go, if there are no further questions, remember, there are so many people trading the Forex markets now because, they have the unique opportunity of, having a relatively inexpensive way to trade. You don't have to have as much capital as you would for stocks. And you can apply these strategies, and they work tremendously with them in terms of consistency, okay? Plus, they're 24-hour trading, so you don't have to, you can virtually be trading around the clock if you like. So they have a lot more advantages than stocks or futures may hold as well. Plus, in my experience, they are the best trending vehicles around, more than any other market I've ever traded. So there's a lot of advantages solely to trading the Forex markets. But here's the problem. Most people, once again, take the same losing or inconsistent trading methods as they traded with stocks or futures onto Forex, and that's why they have difficulty. And this means using very subjective means and ways in which to interpret what's going on, listening to outside sources, going to a lot of blogs or chat rooms and waiting for them to tell you what to trade, waiting for someone to teach you what the best time frame is. Think of your own trading. Ask yourself, how many times do you go to a chat room? How many times do you read a blog of what someone thinks of the markets? How many times do you ask somebody, what do you think of the euro dollar? Or what does this guy think of the British pound? Okay? This is basically, once again, telling the markets, I don't have any idea what I should be doing. And that in no way, whether it's a business, whether it's you're a professional, you should be going into anything. Can you imagine a surgeon being right in the middle of surgery saying like, well, what do you think I should do here? Okay, what's your idea? I know you're the nurse, but what do you think I should be doing? I mean, how much confidence would you have in someone? It's no different from trading. It's your hard-earned money. You shouldn't look at it as if it's a hobby or a joke. You should be in charge. Now, someone would say, well, Steve, well, then what are you doing? Aren't you telling us what to do? No, we are teaching you things that have stood the test of time. These are the things that have sustained my trading for nearly 40 years, and I'm just trying to share them with you, hopefully be able to share and so they can sustain you. Because remember, upwards of 80–85% of all traders fail. They blow out and they lose all their money. So this is what I'm trying to share with you so that you won't blow out, so that you'll be able to trade 10, 20, 30, 40, 50 years down the road. If you really want to take your Forex trading to that level, I strongly urge you to take advantage of this deep discounted price here and become a member of my Forex College, okay? In conclusion, remember, if you want to take advantage, contact Pro Trader Strategies. They have a number of trading consultants that can answer any question you may have. They can set up a payment plan with you, and you can be up and running and have instant access and be a student of mine, okay? I want to thank you so much for attending today. I look forward to you becoming members of my college that will be starting shortly, and I look forward mostly to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.